Hey guys, thank you for stopping by here at thetradinganalyst.com. We're going to discuss some recent trades that we took. I'm going to go over exactly why we took these trades, when we took these trades, where we sold the trades. And the idea here, the reason why we make these videos is to help you learn and grow and get better. Because if you're seeing techniques and systems that work for us, they can likely work for you in your own trading. So I'm going to explain exactly the reasoning behind all of these trades. So the first trade is all of these are long trades in this particular, actually one short trade. But in this particular case, we took a long trade on AXP, and here is why. So first and foremost, AXP, American Express, has been in a major uptrend overall. Okay, this is 100 days of action. If you pull back the chart, let's just do it. A year, you can clearly see we're in an uptrend. Okay, so first and foremost, we are in an uptrend. So here is that nice little uptrend line that we can draw right there. You can see that bounce there, right there, and here are several bounces right there recently. Okay, so I'm going to zoom in so you can see a better action. So here is the setup. So first and foremost, we have a somewhat of a false breakdown setup. Okay, it's not super clean, but there is a support here. Okay, you can clearly see there's support, and then it breaks that support only to break right back over it right there. Okay, so that was the first signal. We didn't enter there. Okay, we didn't enter there. Where we entered was when we broke over this downtrend line. Okay, all right, so we entered here on this day right here when we broke over that downtrend line. We wanted to see a little bit more of confirmation, and we got that. So we got that false breakdown setup. Then we broke over this trend line right here, and this is in a stock that is overall in an uptrend. So we're breaking over the short-term downtrend in an overall uptrend. That's a very nice signal to get long. So we entered right here on this day, right here. Okay, I'm going to show you the position that we took. We took a long call spread. Okay, and here's the position. We took that position on November 6th, and we sold that position on November 28th. Okay, we sold it just recently, and that was a 66% gain here. And what I'm showing you right here is actually something that all of our members get access to. I'm just showing you the most recent trades that we've taken, but as a member you get access to all of the trades that we've taken since July is when we started doing this real-time portfolio tracker. So you can track all of our trades in real time. We don't hide anything under the rug. Everything is out there in the open for you to see. You can see our progress, and you can see our wins, you can see our losses, everything like that. So again, so here's the AXP. We bought the call spreads at 220. We sold them at 365. That's a 66% win for a $6,500 win. All right, and that was an alert that was sent out to members in real time, and we exited over here on this big day right here. I believe that was the day, the 28th. Yep. So this day right here, we sold into that big pop, and we ended up profiting really, really nicely. Okay, 70% win, and yeah, that's pretty much it. So the next trade, let me see here, is INTU. Okay, so INTU, really nice setup here. I'm going to get rid of some of these lines. Okay, so INTU had a very, very nice setup. Okay, INTU, this is my favorite setup. Not INTU specifically, but the strategy. And this is a false breakdown setup. Very easy to use. That's another reason why I love it, is because it's so easy. So here's a false breakdown setup. So you have a clear level of support there, right here. We break below it right here, but we didn't really go anywhere. Okay, we didn't really go anywhere. And notice how on this day right here, this big long buying wick at the tail end had a lot of volume. okay? A lot of volume, okay? So why all of a sudden, when we have all this red right here, is the volume all of a sudden now getting big? Usually volume coincides with tops or bottoms. And right here, since we had a buying tail on the bottom, I thought that that was buying volume. But I wanted to see some confirmation. And the next day, we got a gap up here and a higher high and a higher close. And then we just traded sideways the next day. And then here's the entry signal right here on this day was a gap up, and we closed over the previous 1, 2, 3 days highs right there, and gapped over the false breakdown level right there. Okay, so that was the signal day. Okay, so we entered in on this day right here. We dipped the next day, came down, filled the gap, but notice how we hammered off of it right there. And then boom, the next day got a nice big move up here, and we ended up selling the position right here into, well, the first target was about 209, and the next target was 215. So we sold on this day right here, near the open of the day, as well as near the high of the day on this day right there. And we ended up profiting really nicely. That was a 111% winner. We sold in two pieces. We sold, the first target was 209, and then we sold the second half for an average price of 9.5. We entered at 4.5 on the calls, sold at 9.5, making it over 100% winner for $11,000 gain right there. All right. So again, what you want to focus on is the false breakdown. Okay, clear level of support, it's broken, and then we break right back over it. It's especially powerful when you get a gap. So when we get a gap and closing over the previous few days highs, that's what you want to focus on. All right. So the next one here is BABA, and BABA, really nice mover for us. I'm going to remove all these lines. Oops. So I'm going to remove all these lines. So again, here is a, the BABA play here was a double false move. Okay. So here's how it looks. All right. So here's a clear level of support. All right. Right around here. Okay. You can clearly see lots of days almost hitting it there. Direct hits right there and right there, right there. This day hits it, and then we break over it right here. All right, break over it right here, so it looks like a breakout, right? Okay, so then it breaks back under. Okay, so this is a false breakout. All right, we actually got short, profited a small profit on that trade. Okay, but that's not the trade that we're focusing on today. But then we switched long here on this day right here, and that's because it's a double false move, okay? And this is my favorite setup. Honestly, the double false move is more powerful than the single false move, okay? So here we are breaking over it, break right back under it, and then, whoops, right back over it. Very, very powerful move, guys. Very, very powerful move. Very similar to, you know, if you look at Apple, this is one that I talked about before when it happened. So here's Apple, okay? Here's that clear level of support. Clear level of support breaks that support right here, okay? And then boom, right back over that support, making this a false breakdown, okay? And then boom, right back the next day, right here. This is when earnings reacted. And then you can see, so this is a double false move, and then you can see a huge move lower after that. Okay, that's how powerful these moves can be. Okay, so back to BABA. That was the double false move right there, and we entered here on this day, right there on that small retracement, and then we ended up selling today at the gap up. Okay, all right, at the gap up. Our first target was 162, for the gap fill, but we didn't sell anything there because we didn't reach it here on Friday of last week, and we gapped up to our second target of 168. So we sold all of the position here right at the open for a really, really nice profit. I have all of my trades set to automatic orders, so that, for example, they are contingent orders. So I have in my brokerage, I can tell it to, and you can do this. I'm sure many of you know how to do this, okay? But for those of you that don't, you can set automatic contingent orders to sell or buy options when a stock reaches a particular price. So I have it so that I don't have to do any thinking. I don't have to sit in front of the screen and wait for it to hit 168, and then maybe it gets to 168 and I try to change my mind because I'm the one clicking the buy button. No, it removes the human aspect, or not completely, but it removes the human aspect partially. That way I stick to my levels, and I'm not sitting in front of a computer screen and changing my mind. So that was a nice profit here at 168. We sold at the open. And you can see the reason we sold at this particular place is because we have some resistance right here, and I believe also it's a Fibonacci retracement level. If you draw it from the highs up here to the lows down here, you've got the 50% Fibonacci retracement move right there. And overall, guys, we are in a downtrend here for Alibaba. I definitely think it can head higher. That's I'm not saying it can't head higher, but you got to remember when you're trading, this is a counter trend trade. Okay, it's been in a downtrend for a while now, so that's something to remember. So that's why we're not letting it run as much as we would maybe another stock. Okay, so that was the trade here. Again, we entered here at 464, and we sold those options at the open for 720, and that was a 55% gain, a $5,500 gain. All right. The next one here is XLF, and XLF, I'll delete all these lines here. So XLF, another false breakdown setup. Okay, you can see that I really, really like this setup, and I use it a lot. All right, the majority of my trades are false breakdowns or breakout setups. Okay, and the majority of those are actually false breakdown setups, just because bullish signals tend to work more typically, because most of the time we are in a upward trending or sideways market, and bullish signals perform better, plain and simple. I'm not a bull, I'm not a bear. I'm just a guy who likes to make money in the market. So what we have here is a false breakdown setup, and you can see that here. Here's that support right there, clear level of support, hitting it 2 days in a row here, another 2 days in a row here, right there, and then boom, on this day we ended up closing below that support and below all these lows. Okay, below all these lows, and then boom, the next day here we gapped up. Remember, I said the gaps are very powerful. We gapped up over that level, making this a false breakdown setup. And I want to kind of touch on something really quick. The reason why these setups work so powerful is because the market tends to work in favor of things that don't seem obvious. Okay, the things that most people are looking for. Support breaks here, and they go short at this level. Okay, that's what most new people do in the market. They look for flat supports, and they look for them to break, and that's where they go short. Or flat top resistances. Same thing happened over here. Here's a flat top resistance. Boom, boom, boom. Break over it. Okay, all the newbies, they buy this breakout setup right here. And then, boom, it just breaks right back under it. That's a false breakout up here. Just showing you that in an example. Okay, so that's how these setups work. It tends to, what you see people educating other people on how to make money in the market, you know, flat top breakouts, triangle breakouts, you know, all this simple stuff, those tend to not really work a lot of the times, or enough to make it a winning strategy. So these false breakdown setups are literally the opposite of what most of the newbie people are doing. Okay, you buy when most people are stopping out. Okay, and you sell when most people are buying. That's just how it works. All right, so here's the setup. I'll get off my soapbox. So we're back above that support. We broke the support, gapped back over the support. That was the entry day right here. Okay, strong move since. You know, it built confidence on this day, and we had a short-term target up here at about 27.50, and we hit that target right after the open. And again, I had an automatic order, and it sold right here near the high of the day, and that was just based off of this resistance. It was also based off of previous support here and here and here, and it's also Fibonacci retracement level. If you draw it from the high here, the low here, and you can see the 61.8 Fibonacci retracement level is right there. Okay, so that's why we sold that position there. And again, XLF calls, bought at 80 cents, sold at $1.15, and that was a 43, almost a 44% winner there for a $4,375 win for us. All right, and now we have a losing trade. Yes, we lose. Shocker, right? Okay, so I'm going to go over the losing trade here on Dish. So let me remove all these lines. So Dish here, I'm going to go over why we took this trade. Oops, let me kind of... Okay, so Dish. So Dish has been in a downtrend. You know, I'm going to back it up 3 years, okay? 3 years. So you can clearly see that Dish has been in a downtrend for quite some time, okay? We've been heading lower basically for a year and a half, right there. Definitely looks like we could be forming some kind of a bottoming signal, but, you know, I don't want to count any chickens before they hatch or anything like that. It's in a downtrend, plain and simple, all right? So just to kind of put that into perspective, the trend is definitely down. So that's the first kind of thing that I want to bring to your attention. The other thing that I want to bring to your attention is the fact that, you know, earnings, I focus on signals, technical patterns for 99% of my decision making, but basically the only other thing that I factor into my trading is earnings. You know, how did it react to earnings? If you've been following the market for a while, you know that earnings do move stocks. Okay, I'm not talking about reading earnings reports or anything like that. I'm talking about how does the stock react to the earnings. Okay, that's all that matters. All that matters is the reaction to earnings. Okay, it doesn't matter our opinion or our analysis of the earnings report or anything like that. All we care about is how the stock moves in relation to earnings. And typically, earnings, if a stock can't move higher on earnings, or if it moves lower, that typically means that it's not really going to go anywhere, okay, significant. Okay, we can have short-term moves to the upside, but if it can't move higher on earnings, when is it going to move higher? What's going to propel that higher? You know, other than maybe some random buyout or something like that. But we can't. The reason why I like to focus on earnings and not any other kind of news release is because Earnings, we know when earnings is going to happen. They tell us when every single time. It's every 3 months. We know the day that it's going to happen. We know what to expect, and it's a standard protocol. Okay, whereas some buyout, we can't predict a buyout. Okay, some people, might be able to predict buyouts, but that's not my specialty. And most people can't do that. So I like to keep it simple. All right. So again, I'll get off my soapbox, but so just so you understand that. So we have right here is an earnings reaction. Okay. That was an earnings reaction right here. And you can see it headed higher. Yes. But only for 2 days. And then we just traded sideways. And this sideways trading is totally fine. If after we traded sideways we went higher, okay, but we didn't head higher. We traded sideways and then we headed lower and we broke the lows of that earnings gap up. And we actually made another new low. Okay, so that earnings move totally got wiped out. All right, then another big gap down right here. And then what we have here is the last earnings reaction on this day right here with this big topping tail. Okay. You see, it didn't really go anywhere. All right, tried to make a move higher, didn't really go anywhere. All right, so that's another thing. The other thing here is we have a downtrend line. Right there, right there. Okay, hit it there, almost there, just recently, right here. Okay, so we got that downtrend line. We also have a false breakout setup right here. So here's that resistance there, hit it there, right there, those few days. We broke over it on this day. I believe this is Wednesday of last week, followed by 2 next days closing back below it. So that was the signal here that we looked for. We entered puts here on this day, right here, and some of us entered on today actually on those puts because it was a late alert on Friday. So, but I personally entered on Friday here, and it ended up gapping up and closing over the previous day's high, and back over the 50-day moving average and back over this support level. So that was the reason that I closed out the position. Because it was back over this level and closed over the previous day's high, and that was enough to get me out. The original stop was the high of this day right here, 33.87, right up here. It didn't quite hit that, but a close over this level was enough to get me out. Okay, so either a hit of that high or a close over that level, and it ended up closing over the previous day's high and closing back over that resistance. That was enough to get me out and stop me out for a small loss. Bought at 225, sold at 185, and exited for a 17% loss. All right, for a $1,700 or almost an $1,800 dollar loss. Okay, so you can see that our losers are much smaller than our winners, and that's how you have to keep it if you want to trade profitably. Okay, so hopefully I'll give you guys a good idea of what it's like to be a member at the Trading Analyst. I really encourage you to check us out and see what we're all about. Especially right now in the market, you really got to know what you're doing. Okay, the market isn't always easy money where you can just buy and everything goes up and in your favor. You need to know what you're doing. You need to have a strategy and something that has been proven to work. And we have that here at the Trading Analyst. And when you're a member, you're going to get access to everything that I talked about today. And there's really just get to know us here. On the home page, you can see what makes us different. We are different from all the other services out there. First and foremost, we get results, and a lot of services are actually not getting their clients results, and you're going to get easy to follow trade alerts delivered directly to your cell phone. Each alert and trade idea comes with a video explanation showing you exactly why I think the trade is going to, just kind of the strategy behind the trade, as well as going over the profit target and the stop loss in the entry for every single trade. All right, and these are just a few other examples of some trades that we've taken recently. If you remember, you would have been able to participate in these trades. You can watch our testimonials here of our current members who are satisfied with their results. And the main thing here, not the main thing, but a big thing that separates us from all the other services out there, because I know that you do have a lot of choices in services, is you're going to have the access to that real-time portfolio tracker that I just showed you. That's on the members area. Anytime I update it, it is a direct feed onto the website where you're going to be able to see that real-time portfolio tracker of all of our trades. We've been doing this since July, and we're going to do it for the rest of the remainder of the time here at the service. So you're going to be able to track all of our trades, see what's working, see where our losses are happening, and it's really just about transparency. Okay, it's transparency and showing you everything that we have to offer. Okay, so that's pretty much it. If you have any questions about joining, feel free to reach out to me. I'll be more than happy to chat with you. You can choose either the monthly, the quarterly, or we are having a special on the annual membership that you can take part in for a limited time. I really look forward to seeing you in there. So I'll catch you guys next time.